welcome everyone. This is Energy Africa webinar on Africa's oil and gas. And the theme of the webinar, as you all know, is creating investment opportunities in Africa oil sector. I know we often call it Africa oil and gas sector, but we try to like streamline it because most likely we're still going to have a webinar on gas because it's a sector on its own. So these are creating investment opportunities in Africa oil sector. And with me today for the discussion is the CEO of EnergyGrid, the co-founder and CEO of EnergyGrid, Mrs. Jacqueline Chinwe, as well as Dr. Ayodele Oni, who is actually a very public figure. Is a senior partner at Bloomfield Law. And also have with me today, although he hasn't joined yet, but should be here in a minute. I think Cheeka should be here also in a minute, and Dr. Clovis from Cameroon. So yeah, let's get to it. Let's get in it. I would like the speakers that we currently have to just give us a little bit info about themselves. And so I'll start with the lady, Ms. Jacqueline. Can you just say a little bit about yourself as we try to start the webinar?
Yeah, absolutely. So thank you so much. I'm really, really happy to be here. We're not going to use the starting with the lady as an excuse all the way through. So sometimes we're going to have to give Dr. Ayodele some preps because he's obviously got a wealth of experience in his area. So I'll just start by introducing myself. So as you said, EnergyGrid, very new. So we've just recently launched a social enterprise which is focused on the innovation within youth-led solutions in the oil and gas and energy industry. But from my background, I'm a project engineer. I've spent a wealth of almost a decade working in oil and gas, energy sectors, BP, Shell, etc. But for me, it was really important to kind of get the transition of the talent pipeline. I'm also a future energy leader, global future energy leader. A lot of people would know that with the World Energy Council. So a lot of our focus is kind of really gearing more youth into these kind of conversations and focusing on the energy mix. So whilst I know this is the oil and gas seminar, as you know, I'm experiencing that, I will also be kind of giving my view on what that looks like futuristically in other areas of energy as well.
Introduction. All right. I'd like Dr. Ade to go.
Okay, thank you very much. My name is Ayodele Oni. I'm a partner at Bloomfield Law Practice. I'm also a business person with interest in the downstream gas sector, midstream and downstream. I mean, I co-own gas infrastructure. I also co-own in the financial services sector and also co-own a trading institute. I mean, I'm a lover of luxury cars, so I have a luxury car.
Dr. Ayodele, I can hardly hear you. I can hardly hear you. I don't know whether it's your mic or something.
Is it better now?
Absolutely, absolutely. Yes, it's better now.
Okay. I said my name is Ayodele Oni. I'm a partner at Bloomfield Law Practice. I'm the chair of the energy practice, and I wear a few other hats. I co-own investments, gas infrastructure in the midstream and downstream sector. I also co-own a financial institution, of course not a bank. I also have interest in a training institute. I like luxury cars, and I therefore also have a dealership that sells only luxury cars, Rolls Royces and the likes. Yeah, so I mean, I do a bit more. I write books, and I've written 6 books in the sector, and I teach at the Center for Petroleum Energy Economics and Law as an adjunct, a part-time lecturer, so to speak. Thank you. So yeah, I provide advice to companies looking to do transactions in Nigeria, a number of gas projects, power projects. I've done a lot over the last 15 years. I've also advised on policies, drafted some of the government policies, some regulations in the sector, both for the Upstream Commission, for NERC in the past. I've done quite a bit across the entire value chain, and from a business standpoint and elsewhere. I also, yes, also do a bit of charity. My wife and I co-own a charity, a foundation that pays school fees for widows, poor widows, and gives them some stipends monthly, and a few other older men who are out of work and have no kids to take care of them. We pay them a monthly sum. So I do a bit of this and that. Thank you very much.
Yeah, thank you so much, Dr. Ayodele. You wear a lot of caps. I know personally that you wear a lot of caps when it comes to the energy space. In terms of authorship, I know you've written books on oil and gas and power sector, on other aspects, and so I'm so happy to have you on the panelists. So we just in a minute try to get the other two panelists to join if they're already here. Can you just let me confirm if they're here, so they can join us, so we can have a robust conversation? Okay, I have, yeah, and uh, okay, all right. Okay, I think that's the only person that's here for now. Dr. Clovis, he said he's having some glitches with his network, but Onyeka, okay, Onyeka is fully here. Onyeka is going to be my co-host for today in this event. He's also a lawyer, so like Dr. Oni, and he's one of the convener of EnergyGrid, a kind of energy enthusiast community, and lawyers and legal practitioners. So it's going to be one of my co-hosts today. But let's get to it so that we don't keep wasting our time. Let's get to it. Like Jacqueline said, let's start with Dr. Ayodele Oni now. We're talking about creating investment in oil and gas sector, in oil sector, wherever we want to put it, in Africa. So I think the best way to start, or the best place to start, would be about policies, right? We're talking about investment, growth, development, capital inflow. The biggest issue in the sector will be policy. So I would like to ask Dr. Oni, in your own opinion, your own experience, your distilled experience across the sector, what do you think are the critical reforms that are really needed in this sector as of today to drive investment?
I was muted. I hope you can hear me now. One thing is certainty and clarity. Every investor would rather you have poor laws and they can get smart people to structure around those poor laws than for your legal regime and policies to continue to change, particularly if they continue to change adversely. So it's better they know, if I invest, it will take me 20 years to get my money back because of this policy and that tax, than for it to be A today and B next week, or for it to seem like A, but when you go meet the civil servant, customs, Ministry of Finance, their own interpretation is different. So investors want clarity, and we see a bit of that now being done. It's important. That's one reform. Another thing is that you want to be sure that you have policy to ensure that infrastructure bottlenecks are no longer the case, because very often you find out that you may have a policy, for example, import duty exemption, but when it gets to getting that exemption, in reality, you can't get it. That's a challenge, right? You don't want to have stuff in the books, but in reality, people cannot get that thing. You want to also ensure that you work with it could also be institutional, right? You work with the judiciary. I think the judiciary requires reforms. You don't want a situation where everyone is scared that if we go to court, we're going to be there for 20 years. We're fighting over an asset. I can give you an example. Imagine you own a gold mine, because you think you want local partners who have got more capacity to deal with local issues. You give them a concession over your asset for say 5 years, and after 5 years the guys refuse to go. You take them to court, and you're in court for 10, 15 years, and they probably are not even paying you the fees you agreed. So no businessman wants that sort of arrangement, like, right? You want to be able to enforce contracts. You want to ensure that if you have to go to court in 3 months, in 6 months, you are out, and you have your assets back, for example, that's something that is critical. You understand? Local content policies too. Well, I think those are neither here nor there, because you want to be sure that the sector is ripe enough. There is local content, but also more around reducing capital flight, right? But we're first talking about even getting investors to come, both local and foreign. So I see that many of the policies, fiscal policies, are good. Those reforms are fantastic. The tax reforms are fantastic. Reforms that want to promote efficiency, reduce corruption, and the contracting cycle. All of those are good policies. But enforceability is usually where the cookie crumbles, and reality checks at times. When you now want to actually enforce those policies, those incentives that appear to be the case, you now go to the relevant ministry or department or agency of federal government, and you find out that they don't even understand what to do, or they make it such a difficult process to get it done. And more often than not, people think it's a Pyrrhic victory, waiting for 6 months to get something done. And one brilliant policy this government's done, had its initial hiccups, was unifying the forex regime, right? For me, when I give practical advice, I then say a CCI is probably, maybe you don't really need it, because when you get a CCI, you need to convert your USD to Naira. And when you want to go take it out, you then go to the CBN to get cheaper funds. But there's no such thing anymore. Is that is the investors, the I and E window you have now, right? So I think that that was a good policy, that unification, and removing subsidy, so that people can invest. They know that when they invest, they can get their money back. When they invest, there's enough, there's a market. They are not supplying at less than the cost of production and waiting forever for government to pay that subsidy. They know it's free market. They invest, they get their money back, and I think that those are things everyone else in sub-Saharan Africa should be doing, and our own areas where we're not doing enough should be doing. You want to also ensure that expropriation, whether it's creeping or direct expropriation, is no longer the case. You see that with what happened in Tanzania around 2017, there was declining investor confidence because of issues such as expropriation and retrospective taxes. You pass a tax law and you make a retrospective for a year or two. Once you begin to do that, you become a state where no one wants to invest. So I think those are on the right track, but we need to do much more, particularly around effectiveness and practical reality. And that's usually where the cookie crumbles in Nigeria.
Absolutely. I think I still agree with you on the issue of, the judiciary. I know sometimes when we talk about investment and policies and stability, you mentioned something about stability and knowing when, knowing what the rules of the games are, right? I'm coming in, I'm going out. I know what the framework is. We're not changing the goalposts. But the part for me, I think my own takeaway is the issue of the judiciary. When you said the judiciary must also be predictable in terms of fairness of the law. And the reason why I'm pointing this out is that most of the time, many policymakers and many, governments and whatever, they don't really put this into perspective. How solid is our judiciary system in Nigeria, and by extension, even in Africa? If we're talking about oil and investment, are these people, is there a guarantee of, ROI, return of investment, if I bring my money in, things like that? And I think we'll get deeper into all of that, but that was kind of a takeaway for me. And I'll come to Ms. Jacqueline now. I think we should also talk about a little bit about reforms and policies in your own opinion, because policies, Dr. Oni, about subsidy removal and whatnot. But how do we balance reforms, policy, attracting investments, and also the issue of the welfare of citizens, right? Or the protection of citizens, right? Because we want investment. And we also know that the oil and gas sector is a very volatile sector. It's a sector that there are environmental concerns, there are concerns about climate change, there are concerns about all kind of, oil spills or whatnot, which we don't like to talk about anyway. But honestly, I would like to get your perspective. Where do you strike the balance, in all of this?
Yeah, okay, great. So thank you, Dr. Ayodele. So I must say I have to agree with you in terms of transparency being very important. I'm going to speak from more of a global perspective. So one thing I didn't really say is a lot of my experience is kind of based in UK, Europe, Asia. So most of the critical reforms right now, I believe, isn't just about, like you said, rewriting the policies, but really repositioning Africa as a credible and forward-facing energy partner. And I believe that, future investors they want to know if, the system can really evolve with global disruption. So I really look at that in terms of, leveraging on more collaborations to make sure that we're adaptive. So this means that in Africa, oil and gas policies, we need to aim to be more flexible to accommodate evolving trends, the new technologies like AI becoming a thing, blockchain-based contract tracing. We also, back to Dr. Ayodele's point about clarity, making sure that there's that transparency to build investors' trust across borders. And then lastly, what you asked me about is the welfare and protection of citizens. And I think that's from making sure that we have policies that are integrated in terms of the broader energy mix. So when you speak about the welfare, the protection, and ESG and sustainability, and from my perspective, a lot of the policies that we have now is quite heavy in, oil and gas, but I don't really see a lot of kind of social policies per se. So I think that we do need to kind of go a bit of a shift to make sure that the current policies are integrated enough to taking us where we need to go for the broader energy mix, and also rethink how we define investment readiness. Too often, like I said, we focus on upstream licensing, but we overlook things like grid access or, I don't know, digital infrastructure, or just generally who gets funded, what project gets funded and how. So I think, yeah, from my experience, those are the kind of things that we can start to think about in terms of changing those energy reforms in the African space.
Absolutely. And I kind of agree with you on going. I would say when it comes to knowing where to prioritize, right? Because one of the issues that I feel like you mentioned, that for many African countries, not just Nigeria, by the way, for many African countries, has always been about, oh, we launch an oil bid, there's a oil block somewhere, we're licensing this, and there are other kind of systemic issues that needs to be addressed. That once you just give them the oil blocks and the oil well, some of these oil wells, by the way, are even left idle, right? They are not being explored, and people use all kind of crony, influences to get all of these things, and the government must look into it holistically. I completely agree with you on that. I think we're back. We have Dr. Clovis right now with us. He was having some network glitch before, but he's back here in the conversation. Welcome, Dr. Clovis. I would like you to just give a brief introduction of yourself, and then we can continue the conversation. Your mic is muted.
Thanks a lot, Cyrus. Thanks for this opportunity to share.
Oh,
And I joined halfway, although originally I was at the beginning, but I had a challenge. I had to change the account. And thank you, my panelists. You reinstated me. I am a barrister. I'm qualified to practice law in Nigeria and Cameroon. I am specialized mostly in energy law. I have worked with many energy firms, both in Cameroon, in Nigeria, and also currently in Paris, where I'm struggling to become a member of the law association. I also completed. I'm about to defend the doctorate. I've defended. I'm about to celebrate the doctorate at the University of Ibadan, where I specialize in energy law, and my focus was in respect of local content. And that is why when you invited me for this webinar, I found it very, very interesting. Why? Because local content is something very, very, very impressive, very, very important for us in the African energy sector. I currently run my law firm in Cameroon. And I also have a think tank, which is a policy institute, that is the African Energy and Extractive Policy Institute. What we work currently is we advise governments, we advise multinational corporations, and we also lobby for assistance. Presently, we are working on a project, the Central African Pipeline System, which is going to link from 11 Central African countries, a gas pipeline, and we are getting inspiration from the West African gas pipeline. And this is also important. Why? Because one of the issues we're going to be discussing today is about shared infrastructure. So I'm very happy to participate, and with Jacqueline and Dr. Ayodele Oni, I think we are going to share ideas and then enrich ourselves. Thanks a lot.
Okay. Okay, thank you very much, and I really appreciate your being here, and congratulations on your PhD. Also, I just get to know that you say you're celebrating that you just get certified. That's amazing. All right, let's continue the conversation. I know you said you joined it to be late, boy. You've been part of the conversation, so I'll just bring Dr. Oni in back, and then come get to you. So, Dr. Oni, I would like to, because we're talking about investments, we're talking about capital. We're talking about infrastructure. We're talking about all of these beautiful things, in the sector. And one of the things we've seen, I would say, is renewed interest from the IOC, renewed interest from, the international oil company, the big oils. You see it in Libya. Libya is back launching an oil bid. We've seen it in Namibia, which is the new kid in the block, and other places. Even in Nigeria, we've seen, record high upstream investment. So I would like to ask you, given the whole scenario and the situation going on, how do you think that the IOCs are responding to the initiatives? Do you feel, in your opinion, is it positive, or is it just a kind of hot money flow, go in and go out? What do you think? Do you think the regulatory environment as we have it today, it's suitable for sustainable and long-term investment for the big oils?
Yeah, I think what's happening is that the IOCs are reacting to Africa's rules by being more careful. They are more selective in their engagement, and they are also portfolio rationalizing. Can you hear me well? And they're rationalizing their portfolio. This is
Yeah, I
because
think
of
I
rising
can hear you.
capital.
I can hear you better now. Before I couldn't hear you.
Okay, I said the IOCs are reacting to Africa's rules by being more careful. They are being more selective in their engagement, and they are changing their portfolios. You know, and it's mostly because there's rising capital discipline, issues such as ESG, and the changing global energy transition dynamics. Those have played a critical role. Now, many of them are withdrawing from mature or high-cost Africa assets, and also from assets that they find problematic. E.g., Shell is left all its onshore and shallow waters to a large extent and moved deep offshore. They're not leaving, but they're leaving certain assets for others. If they find out that it's mature or it's high cost, and cost would not only be money, there are externalities that can be cost, e.g., the Ogoni issue. It's not money, but it's high cost to do business there because of the issue. They do a risk-weighted decision-making analysis now, where they evaluate countries and they decide whether to invest or not, just based on reserves, but on above ground risk, including regulatory complexity, fiscal stability, and security. Those are things they are looking at. Many of them are increasingly relying on JV structures with national oil companies. There's a growing trend of IOCs preferring to partner with capable, commercially oriented national companies, e.g., NNPC and ExxonMobil, NNPC and Chevron. There's quite a bit going on around those and financing. So I think that they are being a bit more cautious. They are beginning to maybe even respect our laws more, and because there are other factors, there's the pressure of ESG. Energy transition is an issue, but you see a lot of back and forth around energy transition. At some point, many of them rolled back. I think Shell, Total have rolled back their energy transition plans, and they want to invest more in gas, want to still
Even
invest in their.
BP.
Yeah, even
I said
BP.
even BP.
Yeah, even BP, and they want to invest more in their hydrocarbons, particularly gas. So I think it's a good time for African countries that are gas rich, if they can negotiate properly and ask for what they want, and they must ensure that on the bargaining table they don't stay behind, right? They are firm. I mean, I always say negotiation tables are not war zones, right? But it's a place where you put forward what you absolutely want, right? And you ensure that it's a win-win. So I think that some of the incentives that may encourage deeper commitment from IOCs will be, if you're competitive in your fiscal regime, if you are ESG aligned, if you have a policy support that aligns with ESG, you want to also support them from a processing and export infrastructure standpoint, right? So your terminals, you want to reduce incessant damage, incessant destruction, all of those issues we have with our infrastructure, particularly infrastructure for export. You want to, I personally think that government is responsible for infrastructure backbone. The private sector will just add to that infrastructure backbone. I'm not saying build all the infrastructure, no, but the backbone. Then you see a lot of guys add to it. So I think that they're not necessarily living. They're changing they're changing the way they do business. They're considering factors that were not factors 10 years ago, like ESG, energy transition. They are looking at considering whether an area is already mature and cost is high. They're considering other externalities, and they are then moving around, rationalizing their portfolio. So I think it's still a good time, and even much better a time for the juniors and independents, like the Aradels of this world, the Seplat of this world. Seplat, I think, said they increased production by 200,000 barrels recently, and Seplat said
Yes.
they did, was it 7 or 14% increase in production. All those go to also help the country, right? In terms of value addition, in terms of even our forex. You'd find out that our forex it's not been fluctuating as much as it used to in the past, right? So I think those are the positives, and the IOCs aren't leaving us anytime soon, is my view.
I absolutely, and I think I agree with you. You say they are cautiously optimistic, right? And they are, changing the way they play the game. They see that, okay, fine, these are the kind of joint venture agreement I want to be part of. This kind of products, contracts that I want to sign and things like that. So I agree with you on that. Also the divestment, the fact that they are moving from onshore to offshore because of the history of the past. In Nigeria, for example, we have the issue of the oil spill, in the Niger Delta. In other places like that too, we have issue like militant attacks. For example, I just read today that I think it's in Mozambique that there have been the president has to come and say, I'm pledging security, extra security for Total Energy LNG project there because of the military attack and whatnot. So the cautious optimism is there. However, like you mentioned, the issue of the government stepping in and doing the right thing in terms of giving the infrastructural backbone, the judicial backbone, legislative backbone, and whatnot. So we'll get into more of that. But Mr. Doctor, I think it's Dr. Clovis, you mentioned something about you're so much particular about local content, right? Because at the end of the day, even if you are betting on IOC's investment, you should know that these guys repatriate sometimes 50%, 70%, even in some cases 100% of their earnings back to their country, and they may not be domesticating those investments in Africa, on the continent, in Nigeria, in other places like that, for a long time plan. So I would like to ask you, IOC is a part. What do you see the trend is for indigenous oil companies? What do you think is a trend for them? Are they stepping in the big shoe? What are they doing? And what can they do differently in terms of investment on the continent?
It's a lot at times. Before progressing, I would like to add something in respect of what Dr. Ayodele said. IOCs, they are not disengaging from Africa. I think they are leaving the marginal fields and the mature fields. They think that the resources that they have, if they invest ROI, cannot come consequently. And I remind you, some of the IOCs have been exporting oil and gas for 30, 40 years, 50 years, and they think like we have had enough. And that is why, just like Dr. Ayodele said, they are leaving the Niger Delta. Shell is leaving Niger Delta, and now indigenous companies are taking up. They don't want to be in a situation where they are competing for capital, where they should be getting, like, if you go look at the situation, current situation in Senegal, in Namibia, those are new areas. They are there. Total Energies is investing heavily in Namibia. They are also investing heavily in Senegal. Now, that is because they also have the capacity to go where indigenous companies cannot go. Now, I come to your question. We have the capacity, we have the knowledge. Over time, countries like Nigeria with local content policies, like with the NCDMB, they created the opportunity for, with local content laws, where a technology transfer was possible, knowledge transfer was possible. I had, when I was in the University of Ibadan, had many friends who had scholarship to go and study in the two top petroleum universities in the UK. I think there's Dundee and those two universities. There were requirements for oil companies, and they were in those universities sponsored by Shell and most international companies. It has given the opportunity for those engineer companies to be able to, it has given the opportunity for those indigenous companies today to be able to stand up. We have highest audience, we have first EMP, and we have Setline. Now, they have the opportunity, but they cannot fill those shoes. They cannot fill those shoes. Why? Because there are certain challenges. Challenges like they don't have the capital. Now, for exploring a totally new well, like offshore, you need large sums of capital. And to tell you that at times you can do exploration, the well eventually turns out that it cannot produce commercially. Those are great risks they cannot take into those companies. That is why saying that they can fill the big shoes of multinationals and international companies will be asking more. Think with time. And just like Dr. Ayodele said, if our governments can create opportunities for them. Currently, we are creating the bank that is going to finance local companies. If those companies come on board, if national oil companies offer their assistance to support engineering companies and don't look at them as competitors in their regulatory rules, like they look at them as companies that can bring in the world and make sure that oil companies, because the challenge with international oil companies is that they are business people. When they come in and they extract oil and they sell, they have to repatriate those funds. What is the gain for us as nationals having those natural resources? Indigenous companies owned by indigenes, what they're going to do once they invest and they have money, they are able to raise funds. What they do, they invest on ground, which goes a long way. They are going to employ. Now, it's very, very difficult for an indigenous company to say they're going to employ specialists who are expatriates. They will prefer to train locals. That increases the quality of the service quality that can be granted by locals and indigenes. They can do more. Local engineering companies can do more, like they're doing in other countries, particularly Nigeria. Nigeria is showing the way, is leading the way, particularly in Africa. Over here in Cameroon, national companies, engineering companies don't have a say. But what engineering companies are doing in Nigeria, which is my second home, is an example, but they need support. They need opportunities. And I think Africa Bank needs to come up. The African development needs to be able to afford those finances. They cannot step into those shoes. There's also the possibility of experience and technological know-how. These international oil companies have, they have been in exploration for a long time. They have experience in offshore projects. They have experience in, and they invest heavily in R&D. Indigenous companies, they are not very recently, and to invest in R&D, what I say is like knowing how to be able to develop new drilling methods, explorations, and also investing in high tech, like Chinwe talked about the AI, using AI for exploration today, indigenous companies cannot be able to secure those funds. The time will come. The time will come where, like someone said, it's always important to start from somewhere. We are certain, and the Lord is wrong. Africa is rich, our subsoil is rich, and the opportunities are there. I think I've been able to respond to
Yeah,
that.
absolutely. And I agree with you in terms of exploration, offshore development, the infrastructure, the FSPO, the platforms. These are capital intensive projects, right? And they have high
Very, very
risk, high return model. So even if you are going to that space, you must be well buoyant. And you mentioned something about Nigeria leading the way. Even in Nigeria, some of the big companies that we have, the Orandos, the Sepla, the Aradels, they don't have that level of capital. And there's something that's quite interesting that I think I agree with. Because even if you don't have those capitals, right, like the BP of this world, the Total, the Shell, I think there's also the place of credit. Like in terms of investment, exploration, facilitation, what the problem that we face in Africa, and I don't want to take up, much of the time, but just to make this point, is that we don't have that bank-backed credit facilitation for all of these projects. So most of them is being pulled out from the portfolio, from the revenue of those indigenous companies, and that becomes very difficult to go with. So I completely agree with you. We're going to stay on the issue of local content. I would like Ms. Chinwe to come in now. Let's talk a little bit about, we've mentioned all of these things, but what do you think can be done differently? Because I am of the opinion that IOCs won't stay forever, right? And even if they do, I think we are still rationing ourselves in terms of long-term investment, long-term domestic or expansive investment, because these guys take their profit and repatriate it. So in your own opinion, in your own way, how should we change the game for indigenous oil companies?
So I like how you say, how should we change the game in terms of, putting that into our hands, which is great. But I do believe that this all falls back to what we were initially speaking about, which is the policy reforms. So background is, and I'm not a lawyer, like the two esteemed panelists we have, but as an engineer, I've been involved in a lot of joint venture projects, which have obviously different co-venture partnerships, including indigenous oil companies as well as international oil companies. And the challenge that indigenous oil companies face when they're not operating in a joint venture is, as it was stated, the financing, the technology, the access, the investment flow. And they bring the most valuable local insights, being on ground, with the commitment, understanding the scale and the perceived risks. But the policies can help by maybe, I don't know, giving out some sort of tax incentives for local technical partnerships. So while we're I don't like saying ticking the box of local content, it's not just a case of looking for local content, but actually making some sort of policies that, if you get local partnerships, this is the tax incentives that you can have. So enforcing those meaningful local participation in JV structures will be a first point to start. I think we need to start creating, well, I know from the social enterprise that I've just launched, we need to start creating more innovation incubators. So specifically for indigenous firms. So what I mean by that is there is obviously a mentality of, going to university and finishing and getting a job. But in spaces like the Global South in Africa, where there is less opportunities that are secure, I think we need to start creating like that kind of innovative entrepreneurship type mindset right from universities and kind of upskilling people locally. That would be something that would help, because a lot of the times, we get a lot of expats coming with experience, but if we start training them, training people locally, and not always being tempted to contract work outside of the country, that can then emphasize even more that local participation. Another thing policies can probably help do is I think Dr. Ayodele mentioned this when he said something about ESG capacity building, and funding that ESG capacity building. So what does that mean? We have a lot of these, so to speak, acronyms and buzzwords, but what does that actually look like depending on the specific indigenous company goal? So I think getting very specific and particular about the local content and how you can actually not just use it as a tick boxing exercise, but work with that local partnerships and creating more innovative hubs is something that can really help encourage more of our indigenous oil companies to flourish. And I'm really hoping to start seeing that ramp up.
Absolutely. And yeah, I think I agree with you. Well, like you said, I know I agree with you because NCMB, I believe that's the acronym for the Local Content Advocacy Group, the main advocacy group in Nigeria. And they do some of these programs whereby they enroll people in institutions for oil and gas, get technical skills and whatnot. And we need more of that. I absolutely agree with that. But we are moving the conversation forward because of our time to issue of cost, right? Cost, infrastructure cost, external cost, comparative advantage, right? Comparative advantage in terms of, because when you talk about Africa or Nigeria or, Africa or oil-rich African countries, you are competing with other places. You're competing with Asia, you're competing with the North America, you're competing with Europe. And so cost is a big part of all of this conversation. And nobody's going to come if yours is more expensive. But to drive this conversation, I would like to introduce my co-host. He has been here for a while, Cheeka Onyeka. And like I mentioned last time, he's also a lawyer and an advocate of Africa energy prosperity. So, Cheeka, I think you have the mic.
Hello. All right, Mr. Cyrus, thank you for that introduction. I hope you guys can hear me. Yeah, so thank you. Yeah, so my name is Cheeka Onyeka, and I'm the co-founder of EnergyGrid, which is basically an energy research organization. That's like in short description. And also, I also practice with advocate law practice here in Lagos. It's a leading law firm in Nigeria, and we have superior experience in advising on energy and projects, basically. Yeah, so I'll be stepping in as a co-host for this event, and I think I will continue from where Mr. Cyrus stopped. So on cost, I had so this is for Chinwe. You were mentioning issues regarding to partnerships like local companies and domestic players having partnership for them to be able to pull off projects. So I'm going to ask what infrastructure gaps must be addressed to reduce cost of production and make a project attractive. That's for these local players.
Okay, thank you. So in terms of infrastructure gaps, so I mean, we can't talk about cost without talking about, the connectivity. So I might sound like a record to some people that hear me speak, but the biggest gap for me, from my opinion, is energy access. So whilst we're, getting excited talking about the different projects and investments, we have to kind of understand that there's still 300 million people, over 300 million people in Africa without access to electricity. And for me, before any infrastructure can be scaled, that problem must first be fixed. So for me, that is the biggest gap. So whether I can come here and say, an infrastructure gap is, I don't know, grid modernization or, the investment lag. Yes, those things are very important. But we are in a world of digitalization. we're in a world where, globalization is happening very fast. And having that connectivity, that energy access is one thing that I think, sorry, if you're not speaking, can you put yourself on mute? I think I can hear some background noise. Yeah, so one thing that is one thing for me that I think is very essential to get fixed. So whilst it's not necessarily private organizations that are going to do that, I do know that there's, African Development Bank, World Bank, Mission 300. But what we do, even today, we are kind of becoming a platform for investment interest so that gap can be closed. And for me, because you asked for my opinion, until energy access in Africa is closed, at least, to a certain percentage, we will always be behind. So I can't just sit here and say, I don't know, reduce the pipeline costs or, the grid capacity. Yes, those things are important, but access to energy is the first thing that needs to be addressed, in my opinion.
Yeah, thank you so much for that point that you made. So that's entirely perspective, and I appreciate that. So, but then
Can I
I would
add
like to
something?
add that in terms of infrastructure, apart from the fact that we've, like you mentioned, we have gaps in terms of infrastructure for with regards to energy access for mostly Africans. About 300 million Africans lack access to energy, and that's like a big problem. And we need to fill in that gaps. So apart from that, I also think that in terms of for gas infrastructure, we also need collaboration in that aspect for us to also close in on that gap. So moving on from that, I have another
Yeah, I
question
want to add
for
something.
Dr.
Can I add
Clovis.
something? Can I
Yeah.
add
So
something? I have got something in respect of what Jacqueline said. We have a challenge, very, very big challenge in Africa in respect of infrastructure. I think it's a critical challenge. And you exploit oil on an onshore platform. You need to be able to send it to the market.
I had a
And
minor problem. So I'll continue from where
hello,
I stopped. So for Dr.
hello.
Clovis, I was
Mm-hmm.
saying, to what extent can
Sorry, I
shared
think
infrastructure help
Yeah, sorry, just a moment
lower?
there. Cheeka, just a moment there. I think Dr. Clovis is trying to make a point, and maybe after I make a point, you can come in. But Dr. Clovis has to make a point to collaborate what Ms. Jacqueline said. So please let him
Oh,
let him
okay.
go ahead with the point, and then you can ask the next question. Thank you very much.
Yeah, that's fine. That's fine.
I think we have a lot of challenges in Africa. Pipelines, we don't have pipelines. We need to develop the infrastructure in respect of if you exploit oil, you produce oil in an onshore base, you need it to be able to get to the market. And the only way you get to the market is through a pipeline. We need to develop pipelines. In respect of jetties, transport facilities, we don't have ports. Very few of our ports are dedicated. In respect of treatment, now when you produce oil or you produce gas, you need to be able to treat it before you send it into the midstream sector for either refining or for us in respect of gas when it's either to be compressed or to be transported as liquefied petroleum gas or liquefied natural gas. Roads, we don't have them. Also, it's important to be able to storage facilities. We don't have tank farms. All of this, they go a long way to increase the cost in production, right? Now, if new companies want to come into the production of oil and gas, they have to themselves that they have to invest also. They have to increase. I mean, we're talking of capex, what they're going to invest, and all along the way, they have to develop some of these infrastructures. This obviously is going to explode their costs. As a business, feasibility is their cardinal point. When profitability begins to to get in the situation where it's challenged now, they begin to question themselves. I think that's what I was going to ask. Thank you.
All right. Thank you so much for that contribution, Dr. Clovis. So moving away from that, I would like to reiterate the question I've asked earlier. To what extent can shared infrastructure help lower operational costs for smaller oil producers?
There's a question directed at me.
Yes, sir. Yes, sir.
Yeah, it's important. It's important. It's important. Like I just said, adding from what I was saying, like once you get, if you're going to produce oil, if you're going to produce oil or you're going to produce gas, you should be able to process it. If you're going to produce oil, you should be able to process it. You should be able to store it. You should be able to transport it to the market. Now, if you come into you, for instance, you through a licensing round, you are offered a well that needs to produce. And as a small company, as a small producer, you have to invest anew by building new pipelines, by building CPFs, by building liquefaction plants for your gas, by be able to build jetties or SPMs to be able to carry the goods to the local market is going to affect your operational cost. It's going to affect your operational cost. So one way small producers can gain is by being able to share facilities. For instance, in some countries, companies, for instance, like in the Niger Delta, there are some companies, there are companies that share pipelines. In Ghana, for instance, at the Jubilee Field, producers share liquefaction facilities. In respect of oil terminals, in oil terminals at the ports, oil companies cannot say they'll build their personal jetties, they'll build their personal, it's going to be costly and it's going to affect their profits. So it's very, very important for small producers to be able to affect their profitability and to make sure that they continue in operation to have a possibility where they share infrastructure. And when we're talking of shared infrastructure, we're also looking at the possibility to also share technology. And that is why companies should also participate in JVs, farming and farm out, also be able to participate and work with companies that have experience. So infrastructure is very, very crucial. It explodes cost if it is not well managed. And one way to be able to handle it is to share infrastructure. And sharing infrastructures is like 4, 5, 3, 2 companies who are producing where their wells are in the surrounding. They decide to share a single infrastructure. For instance, if there's an PSO at Lagos, for instance, and there are 2 companies that are producing natural gas from their different wells, they could use the FPSO individually for floating for the production, for the liquefaction of the natural gas before loading it up. This allows any person to use it at indifferent time, and then it cuts down the respective costs. And in the long run, they also participate in the maintenance. And I think that is good for profitability, which is what companies search for. I don't know whether I addressed the issue, Cheeka.
Yeah, thank you so much, Dr. Clovis. That's a deep appreciation of the question I've asked, and I thank you for that. Yeah, so we are going to move ahead to drilling and upstream development. And with Chinwe being, I think she mentioned that she has like robust experience working in the engineering field. So I think this question is perfect for her, and it will be very interesting to hear what she has to say. So for Chinwe, so I have this question. With global drilling technologies, evolving, how can Africa leverage innovation to boost productivity and reduce project risk?
I just let me come in a moment there. I don't think Ms. Chinwe is currently online, but Dr. Ayodele can answer that question. I think I'll ask him question about, can you just repeat the question so Dr. Ayodele can come in and probably address
Okay.
that?
Thank you so much for that, noting that. So the Dr. Ayo, so I said my question was with global technology evolving, global drilling technology evolving, how can Africa leverage innovation to boost productivity and reduce risk?
I think it's collaboration. I think it's collaboration. I think it's retaining talent. We need to do more around collaborating with the West. We've got laws, the NOTAP, we've got NIPC, we've got you know, laws that require that speak to technology transfers and all of that. So we need to collaborate. We need to make it attractive. Government needs, and it's interesting what government is doing around providing loans for students. I think that's critical. But it's not just sufficient to educate them. You also want to ensure that you retain them. So it's a broader economic play. You would be speaking about social economy in this case because there are a lot of talented Nigerians now, and we then need to do something. I think there's a need to connect enterprise with the academia, with research and development. I've heard it said that Stanford plays a critical role in the Silicon Valley. So ideas, concepts at times start from the Silicon Valley and move into practical use, real life scenarios at the Silicon Valley, and also moves that other way too. Can't start from Silicon Valley. There's more research at Stanford. So we need to be able to merge enterprise and research and development. We aren't doing enough for research and development in this part of the world. And I think we as youths to have a critical role to play. We don't want to be left behind when it comes to AI. We don't want to be left behind when it even comes to printing, organ printing, and all of this. All of this also are applicable when it comes to oil and gas. Um, and secondly, we need to determine whether we need to be self-serving. We need to be selfish as a continent and more as a subcontinent and as a country, Nigeria. We need to decide who we want to partner with. Are we even maybe looking at the Chinese? You know, do we want to be able to have a scenario where the engineers come here and work, and we can also work there so that we can buy, still get technology, you know, because beyond having international guys playing here, we need local guys to be able to also invest in research and development, use latest technology for drilling, stuff like SCADA and all of those are critical to ensuring prosperity and ensuring that production is optimized. You know, so I think that it's human capital, more or less, and it's government policy in the social political terrain, and we need to be self-serving in this respect. And I think we can do it if policies continue to be good, if we continue, if we have the right people in the right places. I think we can do it. And I know Clovis was also going to say something, so I'll let him if you got any additional thoughts. Thank you.
All right, doctor. Thank you for that. Thank you for that. I mean that's an interesting and let's say well appreciated submission on that topic. So now moving over to Dr. Clovis. So we really have in Africa, we have unexplored basins and underutilized assets. Do you think that, okay, yes, that's what I think. And then I also want to get your contribution to that. Do you think we, apart from that, do you have like more specific ones that you want to, bring our attention to in terms of, the different African countries, not just Nigeria and not just Cameroon, but other underexplored asset that you think that, you know, if Africa should tap into that opportunity to, it will be good for the continent.
Cheeka, thanks a lot. Presently, just like Dr. Ayodele said at the beginning, Africa, especially after COVID came to an end, Africa is seeing renewed interest, and there are certain new plays that are coming into play. We must have heard about the GTA, Grand Tortue Améim in Senegal. It is between Senegal and Mauritania. They are sharing technology, and GTA, Grand Toti Oni, already started producing this year. There's also Sangoma Basin, also around Senegal. There's an inland basin that's shared with around northwestern Africa, northeastern Africa, where we have Chad, Kenya, Ethiopia. You know, they have the same profile, geological profile. We also have there is the Orange Basin, currently where production just began, and it is managed by Total Energies. There are a lot of this. There's the Lake Albert Basin in Uganda, which oil has been discovered, but they cannot easily get the oil to the market. Why? Because Uganda is a landlocked country, and we were talking about shared infrastructure. Currently, under construction is the East African crude oil pipeline, which is going to be able to liberate the potential of the Albertine Basin. There's also there are a lot of basins currently in production right now. There's a Ruvumba in between Tanzania and Mozambique. There's a lot going on presently, and recently we heard how the new basins were discovered in Libya. Libya, after the war, there was a fall in production, and things are really good. There's a lot of potential in Africa if we could just silence the voices of those who are criticizing fossil fuels. Why? Because that's also a challenge. That's also a challenge which we did not raise. It's very, very important. Why? Because I think at the beginning, Dr. Ayodele said most of those MNCs, IOCs are leaving Africa. Why are they leaving Africa? Why? Because they need to comply. They need to comply with what their government says in respect of fossil fuels. They are asking them to go into renewables. They're asking them to go to that poses a challenge. That poses a challenge. But now most companies, if we could just silence those critics, silence those who are saying that we should not, and follow what I always say, drill for more oil, those basins are going to have fought a lot for Africa. I think I've cited four to five basins, but there are a lot of them. But the critical basins, which they are highly talked of, is the basin in Namibia, Orange Basin, in Namibia and South Africa, and the Grand Tortue Ameim in Senegal. There's also Sangoma. So I think that's one. And then there's Albertine. Albertine is we very much talked about because there's the East African crude oil pipeline, which is currently under construction. It's 1,443 kilometers from Uganda through Tanzania to be able to export the crude oil that's produced in the Albert basins. So
Cheeka, just a minute. Let me make this point. I think I agree with you on, particularly on the issue of silencing the voices that are saying, we should not explore our own advantage for investment, right? This is something that we have, right? This is our natural resources, and yeah, not necessarily silent voices, but at least present a better argument for for oil exploration on the continent. And I think we can make the argument. The likes of NJIU, for example, and other advocacy groups like that are making argument for, oil exploration, that it's not this or that. It's not renewables. It's not renewables, but basically renewables, energy alone. There's also room for oil to play. And I think it's a way for us to leapfrog into the industrial age as a continent. If you have a continent that has, 600 million people living in darkness, you have a continent that does not have its own industrial parks and port and things like that, factories, manufacturing industries that are not, growing. You need oil. You cannot do without oil. And so we don't want to live in a la-la land that is not going to happen. And like you mentioned, we have a lot of basins. Even the discovered ones, the discovered oil wells and oil blocks, some of them are still untapped. Some of them are still yet not drilled, and we don't even know what our unproven oil and gas reserves are, except, we start opening up those places and those regions and channels, for exploration and investment. I think we are way ahead of time. This is a very robust conversation, but the time is not our friend. So I would just like skip some of the questions. I know would have loved to continue more and more, but I would like to just hear a take from each of our panelists. Ms. Chinwe just left now on given the global energy trend, and you just mentioned it, Dr. Clovis, the global energy trend, people are moving away from more green, sustainable energy, the ESG guys and whatnot, which is not against, I don't think it's something that is bad. I just think that there should be a more strategic way to go about it, particularly when it comes to a continent that has been long deprived of its own natural resources, of its own opportunity and potential for growth and for development and for industrialization. What does the future look like for you of energy, oil and gas? And I'll start with Dr. Clovis and then round it up with Dr. Ayodele. What does the future of Nigeria, Africa oil and gas looks like for you?
Thanks a lot, Cyrus. The first thing I would like to say is that we call them natural resources. They are gifts from God. And God gives you a gift. I think for those who are Christians, they say the gifts makes a way for a man. Africans should know that as countries, as nations, those gifts that God has given us should make a way for us. When you look at a country like Norway, Norway has a sovereign wealth fund of over 3 trillion invested in top companies in the US is because of their oil wealth. So the potential is there. We need to exploit it. Now, how we exploit it is the question. And I think making recommendations, we have to use our oil and gas world well. And talking about silencing the voices, energy transition is a reality. We have to use solar, we have to use wind, we have to use other forms of solar, but the oil well in the ground, we have to use it for economic development. For instance, industrialization, Africa needs to industrialize. You raise the point that we still suffer energy poverty. We still suffer energy poverty. Our mothers can cook. They cook with wood. And the dangerous challenge is when we have gas, natural gas in the soil. We should be able to harness our natural resources oil for economic development, build sovereign wealth funds, diversification, use oil and gas. For instance, agriculture is very, 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 very important. We need to eat, we need to feed. Natural gas is a feedstock. Natural gas is a feedstock for fertilizer. We need fertilizers to be able to produce. We need jobs too. Now, if our companies, like we have local companies, once there's production of oil and gas, within the value chain, upstream, we need engineers. We need engineers to be able to work, to be able to drill the oil. Midstream, we need engineers. We need people to work in those refineries. Downstream, filling stations, transportations, we need the oil and gas. Through the value chain is going to afford a lot. And then it is very, very, very important to talk about energy transition, to be able to reconcile the fact that we are moving towards energy transition. We should focus on natural gas, which is considered as a cleaner fuel. But natural gas can be used, we can use it for industrialization, powering our industries. We can use it for transportations. Dangote imported 4,000 trucks the other day. All of them are to run on CNG, natural gas. We should use it as a transitional fuel. We should use it as feedstock, and we should use it for creation of blue hydrogen. There's a lot of potential for the African energies, for oil and gas in Africa, but we need to move on our terms, and we need to focus on transparency, like Dr. Ayodele said, accountability, and then we need to make sure that investments come in, and then we invest the fallout for a better future. Why? Because somebody said even oil can stay for 40 years, someday it will dry out. So I think those are the recommendations I'll make.
Absolutely, absolutely brilliant. And I think I love the way you ended that. Even if oil stays for 40, 50 years, whatever term you want to put it, we still have the energy transition has come and has come to stay. It's up to us to decide how we're going to play our own part in the whole evolution. Dr. Ayodele, what are the future of the oil and gas industry is like for you in Africa?
I think oil and gas will still play a critical role for another 40, 50 years at least. I think that the influence of crude will continue to wane, whilst the influence of natural gas will continue to grow, in my own view.
Mm,
I think that demand in Africa is expected to grow due to population growth, urbanization, and industrialization, particularly for oil and even gas to an extent. We'll focus more on exports. I think Nigeria needs to think of an Africa first policy. I think that about a quarter of the world is already African, or we're almost there. So if a quarter of the world is almost, if you'll be there at some point, a quarter, a fifth of the world is Africa. If you can think of an African first policy for our gas, for our crude, then we don't rely so much on the Western world, right? I think that gas will be the bridge to, or the stop before we finally transition. But you begin to see a lot more of that energy mix. Some would do oil, some would have vehicles that are powered by white petroleum products. Some people would do um, batteries, by EVs, right? So it'll be a combination of both. I think we should do the much we can, exploit our resources as quickly as we can, make the much out of it, use it for industrialization, use it to invest in clean energy in Nigeria and outside elsewhere, like they are doing Saudi, doing in Norway, doing elsewhere, build a sovereign wealth fund. Because at some point we didn't leave the Stone Age because we stopped having stones. The world would just transition and decarbonize largely. So make the most now. I think that for the next 30, 40, 50 years, at least in the working lives of all of us seated here, it will still be relevant, but we then need to plan for the future. That's my view. And yeah, we need to be self-centered, self-serving when it comes to energy policy, so that we can make the most of what we do.
Thank you so much, Dr. Adele. And honestly, the point you make about exploring and optimizing all our resources, irrespective whether it's the lithium, talking about EVs, whether it's the natural gas, which seems like the future of oil and gas right now. Dr. Clovis mentioned something about the Dangote. We saw Dangote unraveling 4,000 trucks, for millions of dollars to disrupt the downstream. All of these things must come into play. And I really enjoyed the conversation. I know even our participants, they all enjoyed the conversation. I could see some question and statement, but we can't go through all of that because of our time. We try to keep to time here. We're supposed to end by 3 p.m., but and we know all our speakers have other obligations and whatnot. But we really want to appreciate everyone for participating. This is Energy in Africa monthly webinar. You can look at the webinar charts to look at some of our website, LinkedIn, X, to follow us there for more updates on conversations like these, for stories, for company updates and whatnot. And also, it's like I said, it's in partnership or it's in collaboration with EnergyGrid from Onyeka, Cheeka, who is also an energy advocacy and energy intelligence organization. They do a lot of wonderful stuff in terms of providing updated intelligence, for energy and energy trend on the continent. So EnergyGrid on LinkedIn, EnergyGrid on Twitter. I don't know if they have a website for now, but I would like you all to follow them and get more data and intelligence on that. So I think we've come to the end of this. Again, thank you so much, all of our participants, Ms. Chinwe, Dr. Ayodele Oni, Dr. Clovis, and do have a wonderful afternoon. Thank you.